financial year. Well, from one good earnings to one that was disappointing, LIC Housing Finance reported numbers. The net profit was down by 7.5% on the back of rising expenses, whereas the net interest income rose 12% this year. The board has recommended a dividend of 9 rupees per share. We caught up with the management and this is what they had to say.
The expenses in Q4 have been slightly skewed, if I may use the word. There have been some one-off expenses we've had to book in Q4, which has probably given us a lower profit after tax. Because if you look at the profit before tax, we are almost slightly higher than what we reported in the quarter last year. Some of the one-off expenses we've had to book in Q4 pertain to one of is provisions for wage revision. The salaries of the employees of the company are due for a revision shortly. So we've had to book about make a provision of 32 crores towards that. Apart from that, there has been a slight change in the manner in which we calculate gratuity in the company. So some additional gratuity liability has come up to the tune of 22 crores, which we had to provide for in Q4. Tax expenses, as you already mentioned, went up by 127 crores in the quarter on account of deferred tax liabilities of previous years. There was also an increased expenditure in the publicity, which was booked in, not booked or which was paid in Q4, of course, but that is expected. We did focus on publicity in a big way in Q4. So these were some of the, I would say, one-off expenses which contributed to our higher operating expenses in Q4 as compared to the other quarters, which probably reflects in the slightly 90 crores of sort of profit after tax reducing.
Right. Okay. So coming to the asset quality, stage 3 exposure at default as of March 31 has come down by 95 basis points sequentially. And in the last quarter, you had mentioned that you expect 10 to 12 large accounts around rupees 150 crore to regularize in this quarter. So have there been any recoveries in Q4 and in which segments?
Yes, definitely. There have been recoveries in Q4 as there have been recoveries right from Q3 and Q4. Last year has been a year of focus on recoveries. We started off the year with a stage 3 EAD percentage of 4.37%, and we managed to bring it down to 3.31%. So the reduction, I would say, has been good. Yes, we are not satisfied with that. We want more than that. 3.31% is still, in my opinion, slightly high. And I believe the hard work we put in all through the year are going to bear fruits in the current financial year. As regards the large accounts, yes, we have got 2 large accounts. Yes, I did talk of, we were working on 8 to 10 accounts, which we hoped to, I would say, bring out of the NPA. But that hasn't happened because of these large accounts. You'll understand many of them are in the litigation stage at the NCLT and IBC levels. So therefore, the decisions to come through and the decisions to be operationalized does take time. But yes, 2 big accounts, we have been able to sort of bring them out of NPA. One was closed and one has come out of NPA. The effort continues, and I'm pretty sure in financial year 24-25 there will be a good improvement in the percentage of EAD, which we see, which stands at 3.31% today. We see this to come down to much lower levels.
The management of LIC Housing Finance giving us the details of how things could potentially pan out going forward. On that note, we slip into a short break, and on the other side, we get you all the action from the futures and options space. Stay tuned in.